Good evening. This is the Elliott Wave update for the S&P 500 and the NASDAQ 100 for Tuesday, October 25th, 2022. Well, we managed to move ourselves up in the markets and get to resistance here in the S&P. It was at 3875. Over in the NASDAQ, it was at 11,728. Then came the earnings. And again, what we've kind of seen all week is this hope, whim, and a prayer that something's going to happen and these earnings are going to come out okay, and the rally will be saved by the likes of Google and Microsoft and Apple, Amazon, and Meta. So what we ended up seeing today in stocks like Meta, that they continued to buy it, which I think really was more of a short squeeze, but I'm not sure exactly what was propelling the buyers to continue to move in other than the volatility. And that would mean the premium and the options that are expiring this week on Friday has been tremendous. In fact, just to kind of do a quick peek right now to see how this all ended up, you can see in these options that expire on Friday, the volatility is 170. Now, Metaverse reports tomorrow. So I would imagine that a lot of this is going to be cleared up before Friday. So this purchasing was in response to just the buildup to Metaverse reporting their earnings tomorrow. And again, Metaverse is a social media site. They're trying to get away from it by changing their name, but nonetheless, what lies underneath is Facebook, and that is the largest part of, if not all of, their revenue, and much of it comes from ad revenue, and that's what caught Google today. I was a little bit surprised. They didn't miss by all that much, but they missed by enough, and I guess they also guided forward, gave forward guidance about what they might be expecting going into the end of the year. Nonetheless, Google was up at 104.50, we'll call it, on the close, and right now is 97.55, bid at 97.59. Metaverse, after traveling up $7.80 during today's session, is now 131.35, bid at 131.79. So what we're seeing is a little bit of, we may have gotten ahead of ourselves. So I think the next couple of days are going to be very interesting. Because again, we have Metaverse tomorrow, then we have Amazon and Apple on Thursday. And both of those have now started to react to the earnings reports that came out today. And maybe are now, traders are now reflecting on what are the real possibilities? Because Apple again caught fire again today and traded well above 152, ends up closing at 152.34, but was up a little bit higher prior to the bell. Now they've zipped off $2 right away. Now that's down trading about that 150. And how comfortable they're going to get as these earnings continue to roll out is going to be interesting. So let's take a look here, starting with the S&P. Again, I'm going to start here on the hourly chart, but I'm going to try to quickly go down so that we really can look at that 5-minute chart, because it's that 5-minute chart that I am really choosing now to trade off of. I'm finding that, yes, I can give you a big picture view and work here on this hourly chart, but what good is that when I can't come down and really display how we're putting these internal counts on, throwing fibs up, and being able to trade intraday on this market. So here we are. I'm now feeling a little bit more comfortable with leaving this as minor wave 1, and this being a intermediate wave 1, and this being an intermediate second wave. I'm getting more comfortable with that versus the other, which still remains as a view, but now I'm switching that one to view number 2, and this is going to be view number 1. And the reason is because this buildup and this intensity that they continue to want to buy, is, I think, going to blow it past what would have been intermediate wave one for this additional view that I carry along with it. So I'm going to switch it up. And I've been working it. I've left it here, and the pattern continues to suggest that it's likely going to be the one that plays out. Now, again, if this is the intermediate fourth wave, so we're going to do a quick look at that other view. If this is indeed intermediate wave 4 that we're in the progress of, then it cannot surpass 38.83. That is the low of what would be intermediate wave 1. Well, where did we get to today? We got up to 38.53. So we're 30 points away. But we have tomorrow, Thursday, and Friday. So we still got, other earnings reports that may just shock the market. And so I'm going to get back off that daily. So that is view number 2. View number 1 is now what I've been working and leaving on the chart. Intermediate wave 1 completed at the October 13th low, and a nice minor degree 5-wave decline. We're working on an ABC up. It's going to be minor wave 2. Now, it was suggested by one of the subscribers that he and I talk back and forth, and he wanted to throw out and actually look at the possibility that this wave 2 that we're in progress of is going to be a little bit more extended. And is that a possibility? Sure it is. It definitely is a possibility. Because don't forget that corrective waves can take between 11 and 13 different forms or different structures fall under that bucket of flat. So zigzag is still a zigzag. And that makes it a little bit more difficult, but it does not mean that we get a zigzag followed by a flat, followed by another group of flats. So not that common, but still would be an acceptable process. In fact, I could say that this is a 3-wave A, 3-wave B, and we're getting 5-wave C, so it still fits. Now, that would be a possibility if all of this activity, that once we're done with these earnings coming out tomorrow and Thursday, if the market is not comfortable saying, okay, that's the top and we're just going to start going back down again, that may be the case. And then we would have to really look at the possibility that this intermediate second wave is going to unfold in a more complex pattern. Yet to be seen, just throwing that out there. Now, I want to go back down to at least the hourly chart to kind of show that now here in the S&P, I did switch it around. I moved that minute one up to the high on the 21st. So, and it just works better and it's cleaner. And then we had minute wave 2, and that came in during yesterday's trade. Then we have this really bizarre, but sort of clean minute third. But notice that it really is going to count best as 3. So I put in some channel lines, which really would be showing me, is this a possibility that the C wave is actually forming a diagonal, rising diagonal? And I think it is. Now, what does that then tell us? If I kind of pull it out just to the 4-hour chart, you're going to see that they cross right at a particular area right there. And that, to me, is showing that's where wave 5 may end up. Right here where I think that these start to cross and that triangle completes. So right in there. And again, we're likely just going to come up underneath all of this, or possibly get up towards that 3,900, where by the time all is said and done, we're up around right in here at the top of this apex of where this is coming in. So now let me go down to that 15-minute chart. Let's start looking at what's going on inside of all of this. So I know that there's probably several subscribers, there's several people that are following my work that are taking a look at this going, well, that points the top. That's it. This is a total rejection. But now I want you, even on a 15-minute chart, look at it in terms of how far the market has come. So here in the S&P, wave 1 is 537 points. Wave 3 is 799 points. So this has really come pretty far after reaching down here on October the 21st is where we had the B wave. But when we go back and take a look at the A wave is the one that started at 3502. Here we are back at 3870. So these are pretty strong. Excuse me. I just gave you the wrong numbers. Those aren't for the S&P. Those are NASDAQ. Sorry. You're probably looking at me going like, he's out of his mind. But still, here in the S&P, we're looking at 37.35 up to today 38. So, it's about 140 points. And we have wave 1 at 30, what is that number? 3640. I'm going to do it for the sake of the math. And 38. So wave 2, about 170. So these are kind of equal. Wave 3, I think, squeaks out a little bit longer. But again, I could count this, and it was all strange. And I thought, but here we're looking at it going ABC, wave 1, ABC, wave 2, ABC, wave 3, ABC, wave 4. So if we get a little bit of a bounce here to start our session, not looking real good at the moment. I'll tell you that. We just got opened and we're dropping even more. So it's going to be interesting, but I'm going to leave it here for right now. In fact, we've now gapped lower below where I could have marked wave 4. I'm going to remove that. And we're just going to keep our eye on this market. Maybe we'll get this to turn around and rally a bit. If not, then seriously, we're going to have to consider what the count's going to be getting up to there if this all comes down and pulls in a failure. So interesting, but I'm leaving it the way it is right now, that this is wave 3. We're going to pull into a wave 4. This could have completed it. We get a little bit of a gap down, we get a little bit of rally into the bell, and then after hour, and now we're coming back, and maybe that finishes it, and we'll start to rally again. We'll wait and see. So now I want to pull it out one more time because I need to replace, and we need to take a look at wave 5. And actually, we need to also just put back in for the C wave. So let me put those back up again and see if we can't. What are we doing here? I'm not sure what that is. Come on. I need to correct that bar. There, to there, to there. Okay, so you can see that we really sailed past 78.6 today. And that was it actually did hold it for a while, and then they popped, and then they came back below it. Now, what's up next? Well, if we kind of follow this up towards 39, but we have 39.15. That would be the 100%, and that works. And again, if it goes up there, then for sure, view number 2, gone. And we're back to the preferred, which is now this particular count. So the market has a lot of work to do to put a little bit more convincing case that we're all done, because right now they're continuing to slide within the NASDAQ. They are just beginning to slide and go lower. So it's going to present us with a very, very interesting picture. Let's leave it like here, but be prepared, folks. Be prepared. If we're going to get and continue and start to break down, then the market is telling us, hey, we're done. We're done. Come up with something else. But that doesn't mean, and again, we can come down and 4 could overlap 1 because of the triangle pattern. That is the only time under Elliott that a fourth wave crossing into the price territory of wave 1 is allowable. And if I'm going to count this as a diagonal, then it would fit. We get a 4 that comes down, breaks the channel line, comes all the way down, maybe gets all the way down to here. I mean, we got, 38.10. It just, we don't know yet. but I'm saying it would be acceptable if it should occur, and then the market to rally back up and get itself back up towards 3880 to 3900. Okay, so what do we need to look for if indeed the market's going to start to break down? Well, let's open up that 5-minute chart and take a look. Right now, we're still getting a nice, clean little ABC. Now, I'm going to open this up even more. Here we go. Here's the high. I had to go 1, 2, maybe 3, 4, 5. Wow. Okay, so we get a 5 down on the little 5-minute. It's not on the hourly. Then we get another rise up. That's a 2. And now we're gapping. So it could be a serious little deal for our marketplace here. It could be all done. It could be. I'm not going to go on that yet. I'm not a position trader, so again, we haven't heard from Apple yet. We haven't heard from Amazon yet. We haven't heard from Intel yet. We haven't heard from a lot of the companies are yet to report. We have Intel also on Thursday. So Intel, Amazon, Apple all on Thursday, and Meta tomorrow. And NVIDIA's out into next week, PayPal out into next week, Twitter out into next week. But Twitter, they keep saying that the deal's going to go through and they're going to become a part of Tesla or whatever. I don't know. So that I'm not really even going to be concerned about. Right now, I'm just taking a look at this pattern. And while we do have an ABC, it kind of would have to stop and start to rally back up, fill the gap, number one, get itself back above here. That's quite the order, considering that this is the first little shock. This is a big shock. Google normally blows the doors off its earnings. Did not. It did not. It missed. And it talked about ad revenue, and it talked about lack of ad revenue, et cetera, et cetera. So Microsoft guiding for fiscal revenue of 52.35 to 53.35 billion. Analyst average estimate was 56. So they guided lower, and that's going to bring the stock down even more. So right now we're down already 18 off of the close. So yeah, let's see. Let's see what takes place. Downside, that's the 5-minute chart. I'm going to go out to the hourly chart, and I'm going to open it up as well. You know, we still got, we're not even challenging the 20 yet. I mean, I believe we're going to shortly, but a break below the hourly 20, a break below the 50s is going to start to spin this in a very negative fashion. And if we start breaking back below what should be support now, is not going to tell a story. And again, while I would allow it to come down this far and then still rally in terms of as long as the patterns remain clean, it is also going to start tacking onto a big, I don't know, maybe it's not, et cetera, et cetera. So we got a lot to really look at and still trade with what's happening right in front of us. So how I'm going to leave this is we still have several more companies, but as it stacks up against them, particularly Meta, it is not looking good for them because they depend more on ad revenue. And Spotify reported, and boom, did not sit well with the market. They missed as well. In fact, I have to go out here to take a look at them. Let me just see where they are right now. And Shop right now is, well, 28, 78, 29, but they're not trading. So, but you know, that was just down a little bit. We're down like $1. So I don't think they're gonna come out roaring by the time they get out of here. So again, Microsoft guides lower. I don't know if Google did the same thing in their press call or conference call. So a lot to digest, market. But right now, I'm leaving it open that we could rally up, finish this thing, finish that intermediate wave 2, and then do a very nasty turn and decline. And I'm going to leave that there for the S&P. Let's go over and take a look at the NASDAQ. NASDAQ's actually doing the same thing. It also gapped lower to start the Globex session. And it's now on our hourly chart. Come on, machine. Come on. It just wants to keep playing games with me. Makes me so annoyed. There you go. You can see, look what it did. It's coming down and it's touching the 50 SMA at 11,463 or 455 is where it's sitting. And that low thus far is 71. So it's honing in on it. And it starts to break there. That's going to open up Pandora's door, not box, the door that takes us into the black hole, sort of. This is all rally. We don't get a lot of support until we get down to 11,253. And then what also sitting right there is the hourly 200 EMA. They start breaking here. Take the hint. Take the hint. Right now, see what this has done? It's over into wave one. So it could, yeah. Okay, Nazi, I'm not sure what you're telling me, but if I have to and put this a 5 up here and put the 2, I will. But I'm going to give the benefit of the doubt. And I don't know if I should or should not. But again, being a day trader, I pick it up where they want to start and go from there. What I would be looking for, it's in a danger spot right now, I will say. And they're rallying back up off of there. But we just have already dropped almost 300 off the high, which was basically into the close. And then all of this activity started. So that's pretty steep. And it would be a rejection of the level. But same deal. 1, ABC 2, ABC 3, ABC 4, ABC 5. And again, it just needs to even get to that high. Maybe it will, maybe it won't. Maybe it's going to be done. And if I had to count it differently, I probably could go with, I'm not even sure, to be honest with you. But if I could do 1, 2, and I could put 3 up here and a 4 and a very small 5, and then kaboom. So it's almost like a 5 failure, you almost could say. Even though it didn't eke out a slight new high. So I could, if I had to. Right now, I want to give the benefit of the doubt that the market is going to gather its wits about it and turn itself around. Again, what we'd be looking for on the hourly chart is it for it to start to break below the 50s. And again, that opens up Pandora's door to kind of start to slide. And because the next level would be the 200, which is at 11,255. Gets down there, it's not going to be pretty. We got a little bit overbought into the close, and now it is just jackknifed and gone straight, heading straight down. So I can't really say anything too positive, like, oh, it's all going to turn around and be great. But what I can add is this is what we look for. If they start to break, I'm going to push this out over here to the 5-minute chart. Not a nice picture. 1, 2, 1, 2, 1. It's just like, wow. So if I have to look at this and say, this is 1, this is 2, and we're breaking in a third, including the gap, and we're not even getting back up to start to challenge the gap, not a good picture. On my 5-minute chart, we are below all of the moving averages. Look at the 5-minute, the 5-minute 50, the 5-minute 20. Boom, boom, boom. They are pointing lower. They are pointing hard lower. And again, I'm going to say, because I'm including myself in this statement, pay attention to the clues. The clues are when this is what it's telling you the market is doing. Hey, it's going down, and it's going down quickly. Remember what I had discussed previously. When this intermediate wave 2 is over, intermediate wave 3 promises to start with a smack with a punch down, with a sucker punch to knock the wind out of the market. Is that what it's doing right now? Possibly, possibly. Now, what's not following? The Russell and the Dow. Dow's off a little bit. Russell's down $1.30. S&P's down 34. NASDAQ's down 220. Those are NASDAQ stocks. But guess what? Google and Microsoft are in the S&P. Microsoft is in the Dow. So no doubt you will not escape untouched. What, to me, coming out of this earnings, who's the stronger, Microsoft or Google? Hard to say. Hard to say. I don't know who I would favor. It would be a little different if we were talking about Google and Meta, because I would go with Google. In any case, let's talk here. 5-minute chart. Again, if this is 2, kind of look at this is 1 and a very elongated 2, and then we get the 3, and then a 4, and then we get the 5. And once again, folks, I can go 1, 2, 3, 4, 5 here, 4, 5, and I can put a 5 there. I'm not going to do it right now. But if we come in tomorrow morning and we're really much even further down than we are now, and they're just kicking the crap out of the market, do it. Treat it as if it's over and we're now heading lower. Trade what's in front of you. And hopefully it's not going to be choppy. You know, like we get some, they're jumping in to buy one stock, but selling everything else. And that one stock happens to be Apple. And suddenly it's like everybody's, it goes up, down, because every tick in Apple puts about $2 onto the NASDAQ. So again, moving averages on the 5-minute, not in good condition. We got the 50 and the 20 heading very quickly to cross over the 200. The 8 and the 4 already have. The 20 is getting ready to kiss it right now. And so it's going fast. So be careful. Now, if it is over, we're starting an intermediate third wave. That would be both the S&P and the NASDAQ. Third waves, I'm going to repeat it. I know I'm very repetitive, are quite often and most often the longest and the strongest waves. Remember what I was talking about. If I'm going to extend, I'm going to go out to the daily. If I'm going to extend this down and put the intermediate wave down here, and this entire move off of the August highs is intermediate wave 1. August highs, 2 months just to do that one. Wave 3 has to come in larger, greater. Out of 1, 3, and 5, 3 is normally the longest and the strongest. And this would be a strong indicator that it intends to be. Again, what we've seen so many times is build up, collapse, build up, collapse, build up, collapse. We got it all over the place. Build up the market, collapse. Build up the market, collapse. Build it up on false notions, collapse on reality. Build it up on false notions, collapse on reality. They did it again. They do it again and again and again and again and again and again. Eventually, we're going to learn. So again, on top of the earnings and everything else, we still have the seriousness of what's happening to the economy in terms of inflation, higher rates. Look at the bonds. The bonds trading above 120, they're going to hold solid. They're not going to move. We're right there. Now they're going to claim their title of we are where people go in times of trouble. We are a safe haven for dollars. No, absolutely not true. Not in this particular situation, but hey, well, we will see. We're going to go with it. All right, I'm going to finish it up there. Again, tomorrow in terms of economic data, we have coming out tomorrow, international trade in goods and new home sales. International trade in goods comes at 8:30 Eastern and new home sales at 10 a.m. Then on Thursday, we have durable goods, which international trade in goods is going to be related to, and GDP. So those and jobless claims all pre-market. And then aftermarket, we have Apple and Amazon and one other that's also going to come in on Thursday, Intel. Thursday is going to be a wild day. Thursday is going to be a wild day. And this all could be in preparation of it. So have a really great trading day tomorrow and stay in your mindset. Mindset's going to be important. Keep strong, keep focused. Don't get wrapped up in the noise that the market's going to try to create. Don't be trying to look for a reason that somebody would be bullish or bearish. It's not going to matter. The market's going to roll right over you while you're trying to make that decision. All right. I'm going to leave it all there, and our next update will be on Wednesday, the 26th.